If you'd invested in Manchester, Leeds or Birmingham back in 2010, which city would have made you the most money? Over the past 15 years, Northern and Midland cities have attracted billions of pounds in investment, with many investors moving away from London in search of higher returns. But did they all perform equally well? Using millions of land registry property transactions, let's compare 7 of the UK's biggest investment cities. This first chart tracks house prices in each city relative to where they started in 2010. Rather than comparing pounds, each city begins at an index of 100, making it easier to compare growth rates. Immediately, one city stands out. Manchester has experienced the strongest price growth in this group. After relatively modest gains during the early 2010s, prices accelerated sharply from around 2018 onwards, before continuing to rise through the pandemic years. Nottingham also performed exceptionally well, showing one of the steepest upward trajectories. Birmingham and Leeds both delivered strong long-term appreciation, although their growth was slightly steadier. Liverpool, despite being viewed as one of the UK's investment hotspots, actually shows slower price growth than several of the other cities in this comparison. Newcastle recorded the weakest appreciation overall, although prices still increased substantially compared with 2010. The key takeaway is that northern cities have not moved together. Some markets have accelerated dramatically, while others have grown much more gradually. Now let's simplify that story. This chart compares average prices in 2010 with average prices in 2025. Every city has seen price increases, but the size of those increases varies considerably. Manchester has moved from roughly £140,000 to over £260,000. Leeds has also experienced a substantial rise. Nottingham climbed strongly as well. Meanwhile, Liverpool and Newcastle remain noticeably cheaper than the other cities, despite 15 years of growth. For investors, this demonstrates that choosing the right city mattered just as much as choosing the right time. Price growth is only one part of the story. Investors also care about liquidity. A market with lots of transactions tends to provide more opportunities to buy and sell. Here we're comparing average house prices against annual sale volumes. Manchester sits in a particularly strong position. It combines the highest sales activity with some of the highest average prices among these cities. Birmingham also has a healthy balance of transaction volume and pricing. Leeds remains one of the more expensive northern cities, but with fewer annual transactions. Liverpool is particularly interesting. Although average prices remain comparatively low, the transaction volumes are still respectable, suggesting that affordability continues to attract buyers. Newcastle sits at the lower end of price and activity, reflecting a slower moving market. Finally, let's look at what people are actually buying. Each city has a different housing stock. Manchester contains a much larger proportion of flats than several of the other cities, reflecting the growth of apartment developments in and around the city centre. Liverpool and Leeds continue to record large numbers of terraced homes, which remain popular with both owner-occupiers and buy-to-let investors. Birmingham and Nottingham show a broader mix of detached, semi-detached and terraced housing. This is important because average house prices are influenced not only by demand, but also by the types of homes that are being sold. Two cities with identical average prices have completely different housing markets beneath the surface. So who won the northern property race? Manchester appears to be the standout performer, combining strong long-term price growth with high transaction volumes. Nottingham and Leeds also delivered impressive appreciation. Liverpool remains one of the more affordable cities, while Newcastle has experienced steadier growth than many investors might expect. The wide lesson is that the north is not just one housing market. Each city has followed its own path over the last 15 years, and understanding those differences is far more useful than just relying on national averages. If you enjoyed this data-driven property analysis built from millions of land registry transactions, please subscribe to the channel. There are plenty more UK housing stories hidden in the data.